Let me put the screen up. See right here, look, these the ones where I really hate when it's set up like these. The ones where I be leery when it give me the setup like this right here, right? Because you see when we come down, you see how it's like this. We had this huge candle here coming down, right? Then we wicked off, and then we had the candle that actually broke the market structure is the candle that made the fair value gap, right? That right there technically is not my setup. It is a breaking market structure with a fair value gap. That would be a breaking market structure, fair value gap retrace, right? That will be a likely trade. That will be a likely trade, but it's not my setup because I need for this candle right here to break the structure. I need this big candle right here. If this big candle would have kept coming down and broke structure there, it don't even have to close below it. But if this candle here would have broken the market structure, and then this candle formed the fair value gap like it did, then that would be the liquidity run reversal. You know what I'm saying? This is a breaking market structure, fair value gap retrace. It's just not my setup. It's not. It's like it has like my rules has it a little bit different. Let me see if y'all can see that. Yes, you can. On this one here, right? You went up there, took out the buy side, but coming down here, once we come down here, right, on the 15-minute for these here, once we pushing down this huge candle here, I would need this to come down and break the structure there. Like up here, how this candle here, this one candle broke the structure there, right there, right? And then the next candle made the fair value gap. That's the trade setup right there, because you got this candle breaking the structure. But here, you got this big candle here coming down, but it didn't break the structure. It could be a retrace and dropping down. The big candle didn't, because I needed to form a swing high, swing low, then break swing with aggressive move, right? And create the 3 candle fair value gap on the next candle. See, the break the swing on the aggressive move, that's got to be here, and then make the, so on this one here, the candle that's making the fair value gap isn't, I need the break to be before we make the fair value gap for it to be my setup, right? And it will be coming from taking the liquidity up here, right? So once we come down and break this right here, the liquidity has been taken from up there. So we dip into the pool up there, then we come down and then break the market structure and then retrace back to the fair value gap, right? But like I say, that candle did not break it, so that wouldn't be this entry model. It would be very similar to it. So we need the large move single candle to break the swing low for this setup. Now that's my setup. If you want to just trade, like, because this is a breaking market structure with a fair value gap. If you want to short that fair value gap when it comes back to it, I mean, that is a feasible setup. You know what I'm saying? That's a feasible setup, right? The only thing that will make me, like, if I didn't have my set rules and I saw this setup right here, the only thing that will make me not want to take that short right there is if we took out this sell side before we went back up to that short right there. So if we just come on down and take this sell side, you know what I'm saying, shorten from this fair value gap would not be high on my priority because we just ran sell side. You know what I'm saying? We took internal buy side above these highs right here. We took internal buy side and we came down to external sell side, right? now that we taking this external sell side, I will be leery of going short from back up here because we just took this sell side out. Now, if we took forever to get back up here, then the short will still be in play. But if we went immediately back up there after taking out this sell side, I'll be leery of taking that short, because once we take out the liquidity, right? Once we take out the liquidity and we move that far back, you know what I'm saying? That kind of make me quake in my boots. See what I'm saying? That make me quake in my boots. I mean, once we go that far and then coming all the way back, that make me quake in my boots. I don't like taking shorts after we've come down, after we took sell side. Now, you know what I'm saying? I'm like, I'm quaking in my boots going up here. Now we done took sell side so much. Now I'm looking for a reason to go back long. Because by the time we get back up here, I'd have missed so many opportunities to go long, waiting for it to come back up here just for it to run me over. Because I done took out this daily sell side. Once we take out the daily sell side, I'm expecting it to get back. Just make sure I answer it for real. For this setup, for the liquidity run reversal, the breaking structure needs to be that big, like up here, like this one here. For example, right here, right? So this right here is the liquidity run reversal, right? We came up, took buy side, went into the liquidity pool, right? Right here, we broke this candle right here, broke this swing low with an aggressive move. We just took out that sell side. This next candle formed the fair value gap right there. Then we traded up into that fair value gap and we dumped, right? So we dumping, and then we stopped. We didn't break the market structure. If this candle would have came down and broken the market structure right there, and then this candle formed that fair value gap that it did, this too would be the start of the liquidity run reversal. That would be one there, and then it would have went right into another one. But since this candle stopped, this is a different setup. This is a different entry model. It's not the liquidity run reversal. It is a breaking market structure fair value gap retrace that will qualify, you know what I'm saying, as the ICT 2022 mentorship model, because you got a breaking market structure, you got a fair value gap right there. So breaking market structure, fair value gap retrace, that will qualify as the ICT 2022 mentorship model. This will qualify as the ICT 2022 mentorship model. But the difference between this and the difference between this is that this one up here is the actual liquidity run reversal. This one down here is just the ICT 2022 mentorship model. And the difference is this candle right here at 8 o'clock, it would be 7:45 on TradingView. This candle broke this low, and then the next candle made the gap, and then this one here, this candle broke the low. The candle that made the gap broke the low. That's the difference between them two setups. Hopefully I was clear on that.